What's up everyone, it's Scotty with Money Investing. Markets here roaring back higher on the back of multiple sectors, not just a handful of stocks, but it was a little bit more broad-based in the markets today with financials, energy, comm services, technology, a lot of sectors pushing higher, hence the Nasdaq, S&P, and the Dow all green on the day. So I hope you guys are doing great. If you guys enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the alerts, binds alerts, options alerts, trade ideas. I did again made some moves, investments in some of the more long-term ETFs and stocks as well. So links going to be down below if you're interested in joining and getting access to those. There is a 16% annual discount that does expire at the end of this month. So links going to be down below. Now this right here was a state of the market. Dow Jones up over 400 points. We got the S&P up over 1% and the Nasdaq up over 1.28%. So the teamwork makes the dream work. This was a very, very broad-based rally, and that's exactly what we want to see. And you can see how strong the days can be if there are more stocks participating versus only just a handful of companies. This right here, again, was the strength of the market. Over 1,900 stocks up between 0 and 2%, and over 1,500 stocks up between 2 to 5%. And very, very few companies, just about 1,700 of them, were actually declining on the day. So most stocks, over 4,400 stocks, were participating in this move higher and were green on the day. Now, before we get any further, I do want to address one of the comments from yesterday's, actually earlier today's video that I posted, one of the highest quality companies. We talked about, a stock which, in my opinion, has lots of potential, and of course is one of the best well-run companies in the US, in my opinion, because their revenue, their earnings, everything are very good. So make sure that you do watch that video if you haven't already. But there was a comment from one of the subscribers, and look, I never take offense and I never will take offense to whatever criticism you have to offer, because at the end of the day, I know that it's coming from a good place, and my job is to kind of direct you and guide you in the right place as well, right? I'm not gonna get defensive. I'm gonna welcome it, right? So really, I mean, that was the whole point of me doing a video where I'm giving you the opportunity to criticize in a more constructive manner so we can really, improve and refine our analysis. There's blind spots. Everybody has them. There's biases. Everybody has them. I'm human too, so I will make mistakes. And investing is such an interesting business because there will be more wrongs than there are rights. And I'll show you exactly what I mean by that. But this right here was the comment after losing most of my portfolio on PayPal, no longer taking your advice on what are good and bad companies. So first of all, first, I'm sorry if you lost your money on PayPal, because obviously PayPal has not performed well. But the one thing that I want to point out, and I'll go over some of the responses, some of the comments that I made to respond to this person. But one thing that we have to understand, that in investing, you are not going to be right 100% of the times. If you pick 10 stocks, if you're good in this business, maybe you are going to be right on 5 of them. Yes, that's the reality of investing. And if that's something that you cannot accept, I think you're better off just investing in an index fund, more diversified, and just taking a bet on the entire market instead of individual stocks, because individual stock picking is not easy. It is not an easy thing to do. And as I've said, I've read multiple books, and I'll kind of come back to this, what I responded, but this is the psychology of money. And Peter Lynch himself once said that, over here it says, Peter Lynch, one of the best investors of our time, says, if you are terrific in this business, you're right 6 times out of 10. And over here, I've highlighted some of the other things that I wanted to mention, is that if you're a good stock picker, you'll be right maybe half the time. If you're good in business, or if you're a good business leader, maybe half of your product and strategy ideas will work. If you're a good investor, most years will just be okay and plenty will be bad. So the bottom line is that there is going to be some tail events, right? That's the whole idea behind this, is that when you expect that tails drive everything in business, investing, and finance, you realize that it's normal for a lot of things to go wrong, break, fail, and fall. The future is unpredictable. Nobody knows, right? Nobody knows what's going to happen. And the fact is that some of the things that nobody predicts are the events that actually move the needle the most. COVID, nobody predicted, right? That's the thing that actually moves the needle. That's the thing that's a tail event. It's an extreme which actually affects us and our lives. So the bottom line is that if you are going to be in this business, or if you are going to be in this endeavor of actually investing in individual companies and stocks, be ready and be accepting of the fact that you will be wrong more than you will be right. But the idea is to actually make more money when you're right and lose less when you're wrong. And that's where risk management comes in. And this is a very good example. This is from the same book, Psychology of Money from Morgan Housel, which pretty much addresses this. And at the Berkshire Hathaway shareholder meeting in 2013, Warren Buffett said he's owned 400 to 500 stocks during his life and made most of his money on 10 of them. Just think about that for a second. Even if Warren Buffett can pick 400 to 500 stocks and only make most of his money on 10 stocks, why do you think that I can pick 10 companies and be right on all 10 of them? It's not so much about the outcome, it's really about the process that we're trying to follow here. We're trying to follow a good process. And if you follow that good process over long periods of time, that good process is going to make you more money when you're right and really help you limit down on your risk when you're wrong. And that's the whole point. Charlie Munger followed up. If you remove just a few of Berkshire's top investments, its long-term track record is pretty average, right? And even George Soros says, and I quote, "It's not whether you're right or wrong that's important, it's how much money you make when you're right and how much you lose when you're wrong." Those are some things to really carry with you if you are going to be somebody who watches investing content or is investing in the markets or really into stock picking or really just investing in general. These are some things, these are lessons that you got to take with you and accept that this is the reality. And I'm giving you the reality. I'm not going to be here sitting here telling you that, hey, that was unlucky, that was bad fortune, and I was wrong. I'm sorry, and in the future I'll do better. Yes, I will try to do better in my analysis, in my thought process, but even knowing the fact that I will be wrong. I will be wrong. There will be times when I will not be able to do, the things or the analysis, or will not be able to forecast or predict because it is difficult. It is challenging. It is hard. The world is unpredictable. The life is full of surprises. And that's a reality of it. And really what you have to focus on is risk management. I mentioned if you invested most of your portfolio in one single stock, that's all I need to know about your understanding of risk management and position sizing. Good luck to you. And if anyone out there in the world picks 10 stocks and tells you that they will be right on all 10 of them, please come back to me because I have a bridge in Brooklyn I'd like to sell you, because that would be such a lie. Because just as I showed you, even the best of the best don't have it right all the time. Peter Lynch, 6 out of 10 times. Warren Buffett, I mean, if you do the math, 10 divided by 500, that is what? 2%, right? 2% of his most top returns, right? We can only regard it to Apple and the likes of Bank of America and Coca-Cola. Like only just a handful of companies made most of his money, right? That's the tail events driving the overall returns here. And then I also mentioned, as investors, we know that we will be wrong. Nobody can predict the future. Our goal isn't to always be right, but instead focus on losing less when we're wrong and make more when we're right. Remember that, and it'll serve you well. So that's what I wanted to mention. And look, I will never shy away from addressing some of the criticism because it helps me. Like, right? That's another feedback that I'm getting from you, and that will help me in my analysis. But I have to be accepting of the fact that investing in general is a business where I will be wrong. Nobody can predict the future, and I will be wrong more times than I will be right. But my goal is risk management plus a good process. That's the recipe. A good process plus risk management will over time lead to better returns and better results. So that's something that I wanted to mention. And this is another thing from another excerpt that I'm reading. I'm actually reading a different book now called The Most Important Thing, and by Howard Marks. And there's actually 20 most important things. And the first bullet point and the last bullet point I wanted to specifically mention of this chapter on understanding market efficiency. And what Howard Marks says, by the way, he's another great investor of our time. He says, market prices are often wrong because access to information and analysis thereof is highly imperfect, and market prices are often far above or far below intrinsic values. Definitely a very, very powerful thought, because what he's saying is that markets are not always right. Oftentimes, prices are either too far up or too far below their intrinsic values. Anyway, going back over to the markets, a very strong day. Hopefully that was a little bit of an educational session and some lesson learned during that time. But this right here is one of the reasons why the markets are rallying today. Biden, McCarthy say U.S. won't default as debt talks inch forward. So you'll notice that he says, McCarthy says, and I quote, "I think at the end of the day, we do not have a debt default. And President Biden followed up with those remarks saying, we're going to come together because there is no alternative, and every leader in the room understands the consequences of failure. So we already knew that this was going to happen, right? We knew that the debt ceiling was either going to get raised or suspended, but the path of getting there was going to be bumpy, was going to be last minute, was going to be conflicting. So that's what we're kind of going through right now. And we understand that debt default is not a option, right? That would be very catastrophic to begin with. So they are going to eventually make the right decision, but just getting there is going to be a little bit more time consuming and volatile. So this was the entire market. Again, we got technology, we got semis, we got software, we got financials, we got healthcare, we got industrial, we got materials, energy, and cyclicals. A lot of sectors pushing up except for consumer defensive and utilities. Those were the two sectors, as well as healthcare kind of struggling a little bit. So 3, I would say, out of the 11 that were pulling back. So it wasn't really just a broad-based, but yes, this was about as close as to we can get today, as financials pushing up, cyclical, technology, industrial, energy, real estate, comm services, and materials, all sectors in the green, with of course healthcare, defensive, and utilities were the only ones pulling back. Over the last 1 week, we do still have 3 to 4 sectors that are driving the market, and it's kind of like half of them are up, half of them are down. And over the last 1 month, it is still very much dependent on comm services and technology. So over the last 1 month, this is still not a broad-based rally, but yes, on the day, it's a good beginning. It's a good starting point for us to look at. This right here, crude oil and canola prices and soybean pushing higher, with orange juice, cotton, lean hogs, sugar prices pulling back. And that's where we are, with Bitcoin here back over 27,000 and Ethereum a little bit over $1,800 as well. This right here is another thing that I wanted to mention. This is in my text channel for all the members that I posted today, giving you a little bit of perspective on the market breadth. So this is on a more broader scale that I'm talking about, not on the day, because on the day the breadth was good. We were seeing a lot of sectors, a lot of stocks push higher. But overall, we are broadening out a little today, as I mentioned, and nonetheless, we are concentrated on these 7 stocks to put things in perspective. Among these 7, which are your big tech, of course, you got your Apples and Amazon and Google, Meta, Tesla, Nvidia, and Microsoft. And among these 7, Nvidia and Amazon are the most expensive at over 80 times earnings, and hence have the lowest earnings yield of under 2%. Among these 7, Google and Meta trade at the lowest relative multiples at 25 and 26 times respectively, but this is on a relative scale, not on an absolute scale. This right here, among these 7, Nvidia, Meta are up the most year to date, almost up 100% each. Apple has added the most market cap at over $600 billion. Tesla the least at under $175 billion. Collectively, these companies have pulled in over $2 trillion in market cap, and the average P multiple for these 7 companies now at 46, median at 31, and the average earnings yield for these 7 companies is under 3%. A 6-month bond is at 5%. So just to put things in perspective a little bit in terms of valuation, because again, going back to this quote, that most often prices are wrong and they are either too far above or too far below their intrinsic values. So, and this is something that I mentioned on the channel before as well, right? Most stocks are not trading at their fair value. They're either too high or too low. And I think we can make a case for the former here, that they are certainly not at their fair values right now. A lot of these stocks aren't trading at their fair value. But that doesn't stop the sentiment, the momentum, the behavior side of finance and investing to push these stocks even higher. But it's our job to recognize that and be careful of the risks, because buying at these levels obviously is yielding low in terms of earnings. It's paying a very high multiple, and the fact that they've already moved up so much on a year-to-date basis, all those things when put together, the risks are certainly high. It's just our job to recognize that. So moving forward to the entire market here, NASDAQ very, very strong, 12,500. We got the Dow Jones pushing up 400 points, and the S&P 500 also up to 4150. I think the S&P is still inside this bear camp, I would say. We are still very much inside this red rectangle, although very strong green day, and we're seeing some more broad participation, and NASDAQ is rallying even further outside of this bear camp, so I think we can safely assume that this is no longer the case. We are going to turn this into a huge support for the NASDAQ now, and the next target is going to be at 13,200. That's going to be 700 points away, or a little bit over 5.5% for the NASDAQ moving forward. So very, very strong move on the back of course, technology and other sectors also participating. And the next target and resistance going to be at 13,200. S&P 500 is also catching up to that now as we speak. Talking about crude oil, getting up to that resistance again, $72, $73 per barrel is going to be that level, is going to be that resistance to watch, and support level is going to be at $65 per barrel here. So that is going to be that support level for the moment. And right now, of course, we're consolidating sideways very much, and resistance at 73 all the way up to $81 per barrel moving forward. Talking about Ethereum, just mostly trading sideways here, a little bit over 1,800, and Bitcoin also just over 27,000. So we're seeing a lot of consolidation for BTC as well. And of course, resistance is going to be at 30K for Bitcoin. Now going over to individual stocks, Apple here, once again getting bought up over 36 basis points, so trading past 172, and resistance is going to be 177. So this right here is going to be that level to watch, and support level is going to be 157, 158 for Apple. So that's going to be the level, and of course we are still kind of forming that negative divergence. RSI continues to make lower highs, and the price itself continues to trade at elevated levels. Not to mention on the weekly time frame, the RSI and the MACD are extremely overbought as well. Talking about Amazon, now Amazon is one company that is doing very strong. It's actually deservedly so. It's starting to push up. And of course, we know that the earnings multiple are all because of the Rivian losses, and then not to mention that their focus has not been on profitability for the longest time. But I think as the company kind of shifts that under this new leadership of Andy Jassy, I think there's going to be more and more emphasis on profitability and earnings. But right now what we're seeing is RSI and MACD start to push out. We're starting to get a bit of a breakout past that 300 simple moving average at 114, and not to mention the previous resistance from back in January of 23. So that is a very important level of 114, 115. We're starting to break to the upside from that resistance. And the next resistance really going to be at that 200 simple moving average sitting roughly at 131. And that's going to be in line with this resistance where we have gotten rejected back in June of last year. So we are just really testing our level, or getting up to that level from about 1 year ago. Talking about Tesla, and Tesla had a very strong green day, pushing up over 4.4%, back over 173. So we're seeing a lot of momentum here for Tesla, and the next resistance is going to be at 175, 176. So this right here, right now we're actually still inside this red rectangle, so I would call this to be still inside the resistance at the moment, and all the way up to this right here at $205, $204. That's going to be that next potential resistance level to watch for Tesla. And of course, support level is going to stay put in the 140s and 150s. I will be looking at maybe selling some covered calls again if Tesla kind of regains that momentum back over 190 or closer to $200. I will be looking at selling covered calls once again. Talking about advanced micro devices, and AMD continues to push up over 2.2%, seeing a lot of momentum here. $109 is going to be that resistance to watch for advanced micro devices. Very, very nice move to the upside. We're going to go ahead and turn this level into a new support for advanced micro devices, and resistance is going to stay put at close to $109 per share. So that's going to be that next level to watch for advanced micro devices. Support level is going to stay put at close to $100 per share. Talking about NVIDIA, and NVIDIA, look at that. Huge breakout, right? Huge new 52-week high, past 3.3%. So I think we can safely assume this to be a new support for NVIDIA since we are starting to break to the upside. Congratulations to all NVIDIA holders out there, and just absolute incredible momentum. And next resistance and target's going to be all the way up to 347. So that is going to be that next resistance and the level to watch for NVIDIA moving forward. So that is going to be that target to watch. Talking a little bit about PayPal, and PayPal here finally getting some momentum. Buyers stepping in up over 1%. Support level is going to stay put at 57.50. So this right here is going to be that level to watch as a support for PayPal right now, and resistance is going to be at $66 per share for the company. Talking about Square, and Square also pushing up here, up a little bit over 4%, and resistance is going to be at $58, $59 per share. So that right there is going to be that level to watch for Block, and of course support level is going to stay consistent at roughly around $52, $53 per share. So this right here, very strong support. Resistance right now in the near term at close to $59 per share right now. Talking a little bit about Meta now, and Meta here on the day pushing up over 1.5%, back over 242. So definitely getting up to a new 52-week high here, and we've got a huge gap to fill, somewhere between 248 and 290 for Meta. So that's going to be the one to watch, and of course there's some upgrades and price targets up to plus $300 per share here. So those right there are going to be some levels to watch for Meta. Again, I think valuation, relatively speaking, for Meta, Google are a lot better than compared to some of the other tech stocks out there. But even then, you know, they can be considered to be somewhat on a more expensive side as well. Talking about Netflix here, and Netflix, again, seeing a little bit of momentum. It got rejected at 348, rightly so, because it has been, you know, rejected here in the past. So this right here, very strong resistance for For Netflix, we did get a breakdown, and today it was very strong, up over 1.86%. So seeing some momentum back up. And this right here, of course, is the symmetrical triangle. We did start to see a bit of a breakout, but then got rejected at this previous resistance. Talking about Google, then Google continues to push up, and we are now approaching that resistance at 123. So RSI, MACD, very, very overbought here. And of course, the price itself getting up to that resistance. We got to be careful at that resistance and kind of really look down below and look at the risks involved here. And 123, again, valuation wise on a relative scale, not that crazy, but just from a technical standpoint, it's definitely done a really good job in kind of recovering a little bit. And it's only 25 to 26% away from its all-time high. So first resistance and target to watch at 123. Talking about Microsoft, and Microsoft also starting to break to the upside here past $312, $313. So we're starting to see even a further momentum, further breakout to the upside for Microsoft. And next resistance is going to be pretty much at all-time highs. This is going to be that next target to watch at 345 for Microsoft. And of course, not to mention that we are very, very overbought here on the weekly time frame. RSI is getting back up to 70. And of course, MACD is also really, really rich in terms of overbought levels here. RSI at 69.69. It's quite an interesting number. Gotta make sure that you are paying attention to the risks involved with that technical overbought level as well. Shopify up over 1%. Next resistance is going to be at $75, $76. So this right here is going to be that level and target to watch, kind of in line with that 200 SMA, and support level is going to stay put roughly at $53, $54 per share for this company. So that's going to be it for today. Hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like and subscribe to the channel. Link to our Discord, Patreon is going to be down below. There's only 3 spots left if you want to join, of course, be a part of our money investing community. My only suggestion from this video would be, or the lessons learned would be, understand and accept all of the idea and the fact that in this business, in individual stock picking, or just investing in general, even if you are investing in an ETF or index fund, there's going to be times when we are wrong more than we are right. But our goal is risk management and doing our due diligence and trying to analyze and understand as much as we can to limit our risk. The idea is on risk management and making sure that when we are right, we are able to capitalize on those opportunities. We don't sell our winners too soon, and we don't hold on to our losers for too long. And when we are wrong, we're able to cut that short and, of course, manage risk well. So I hope you guys enjoyed this video. Find it helpful. If you did, make sure that you drop a like, subscribe. As always, happy investing. I'll see you all in the next video.